Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Bull versus Bear webinar. Steve Miley on the call here for Trade Day on Tuesday, the 17th of January. Trust you all in the US had a good long weekend. For those of you who took the long weekend with the MLK holiday. I trust you avoided trading. Markets were pretty subdued. I think it probably would have been difficult unless you're a mean reversion trader. Maybe you did okay through it. But I mean, my advice was to take the day off, take the holiday. It's what it's meant to be, a holiday, rather than trading the truncated, shorter hours that we did have. Right, first order of business as we go into this week, we're going to take a look at the Trade of Mind session we have coming up tomorrow. Tomorrow, for some reason, the countdown clock in here, I think it's doing it off of GMT. I'm thinking it's 12 o'clock off of GMT. Anyway, this countdown clock is not quite correct, okay? But we'll have a look and get that fixed. But suffice to say, these are the times, okay? So it's tomorrow on Wednesday, the next Trade of Mind with these two good-looking chaps in here, James and Steve Miley, will be on talking about all things psychological and risk management. So the Trade of Mind session, we will be looking at, I think we're going to have, as I remember, yes, we're looking at goal setting. One of our traders sent in, we thought it was apt in January to talk about goal setting and what is a good way to go about goal setting and look at some of, he's kindly allowed us to, we're probably going to look at some of his goals that he's set and we'll talk about those goals. If anyone wants to send in anything else, okay, anyone on the call today or anyone listening to the recording ahead of the Trade of Mind the Trade of Mind session, if you want to send in some of maybe the goals that you've set yourself, and we'll take a look at maybe those as well. Maybe we'll pull them all together, look at there's any common themes, and give our views on what's good, what's maybe not so good, and what we're looking at for goal setting going into this year, both on a yearly basis, on a monthly basis, maybe on a weekly basis, on a daily basis. So all things goal setting in the Trade of Mind session. Tomorrow, Wednesday, the 18th of January, it's 12 o'clock Central, okay, 12 o'clock noon Central, 1 o'clock Eastern, 6 p.m. in the evening if you're in the UK GMT, 7 p.m. on Central European time. Okay, so enough of plugging that. Let's move on to the daily calendar. Actually, what I want to do in here, I'm going to quickly go into the trading room and hopefully jump back out of the trading room in here. So let me just go do that because otherwise I'm going to hear myself. But I want to download the weekly look back in the head because we didn't do that. So hopefully we'll pick that up. Where are we? The weekly. Okay. Oh no, it's got me. Oh, there we got it. So there we go. Okay, so here's the look back and the look ahead. My weekly macroeconomic fundamental look back and look ahead. So obviously, all last week was all about CPI. Markets continued to be fairly positive post CPI. They were positive on the run into CPI. So when I say markets here, I'm referring to the stock markets. Very much in risk on mode. We've seen generally, I mean, it tells you we're in risk on mode, right? Look at the cryptocurrency markets. Bitcoin has been on a tear to the upside in here since the beginning of the year and has really accelerated last week, both ahead of and through the CPI data. We had a big gap up as well across the cryptocurrency markets from Friday through the weekend on Saturday, a dip back into those gaps and then rebounding out of those gaps today. So the crypto market telling you we're in risk on mode, stocks staying firm, relatively firm in here since the CPI data, holding on to gains. And obviously they were strong ahead of the CPI data anyway, breaking out from the early part of the year. We had a very much a range environment and through from the holiday season. So stocks in the US and particularly in Europe, okay, Europe looking particularly strong in here, continuing to add to gains seen since the beginning of the year. A very, very strong start to the year from European stock indices. So recapping all of that, earnings season kicked off last week. We had Wells Fargo, JP Morgan, Chase, Bank of America beating consensus expectations despite some cautious outlooks. They all managed to push higher back on Friday. And we also had in here UK GDP in here grew 0.1 in November, beating forecasts for a contraction, maybe a recession, even like it looked like we were nailed on for a recession. I've said that previously on the calls in here from last year. It looked like if anyone's going to go into recession, it certainly looked like the UK was going to, and certainly parts of Europe. And it looks like even Europe now might avoid a recession, and a good chance that the US could avoid that recession too. US is probably in a better place than much of Europe. Okay, so bond yields continuing to fall last week. Let's take a look ahead today. So we had obviously the MLK holiday yesterday. Bond cash markets, equity markets were closed, although we had a partial open on the futures. Looking ahead to there's a big focus this week on the Bank of Japan. So we get that on Wednesday, which is actually overnight tonight. Okay, so if you're in the US and for Europe, we're going to get that through the overnight session in here. There's a big focus on that. I'll talk briefly about that, but real risk that we get more of a slightly more hawkish shift, having already had a hawkish shift, a very unexpected hawkish shift previously. There's potential for that to happen again in here. So we'd certainly be more eyes on the Bank of Japan than we've had in here for the last meeting, than we've had in here, I would suggest, at least years, maybe even decades. Okay, so certainly be watching that. And the other main piece of data, if you're particularly from the US, is we've got retail sales. That doesn't come out until Wednesday as well, though. So going into today, we've already had the UK employment report, German CPI. We'll look at that shortly. German ZEW. We do get Canadian CPI today. We do get UK inflation. That's going to be important. Remember, UK inflation has been pretty high. It's been running a lot hotter than we've seen in the US. And for much of Europe as well. So it'd be interesting to see how UK CPI, which has been running very high compared to a lot of the major global economies. Let's see how UK CPI does tomorrow morning, which is going to be on the overnight, obviously, if you're in the US, and also Eurozone CPI as well. And then we get US PPI, but the big focus really for the week from the US is going to be on the retail sales data we get on Wednesday. Australian employment report, probably not too important, but given we're looking at, the other big focus there's been since the beginning of the year is the whole reopening trade from China, okay? And if China's going to successfully reopen, and can that give it a significant boost to the global economy into 2023 and see economies avoid recessions. And then at the end of the week, we also get the PBOC, the People's Bank of China, interest rate decision, UK retail sales, Canadian retail sales. So the big focus really this week from the US is on the US retail sales on the macro side. We also get, though, okay, so I've got them listed here, but we've already had some of these: Morgan Stanley, Goldman, Procter & Gamble, and Netflix, and we'll take a look at those just as we go forward now. Let's take a look at today. So we've already said in here, UK employment report in here we've already had. You can see beating expectations. So the actual employment report in here mostly beating expectations. The one that's a bit of a concern is that average earnings, okay, were higher than expected. 6.4 coming in at 6.4 compared to 6.2. So that's a little bit of a concern in here at 6.4 versus 6.2, because obviously that could add to inflationary pressures. However, the unemployment rate coming bang in line with expectations, and the other European data in here, UK data was fairly firm, showing the labour market is still strong. Okay, so that's kind of a positive for an avoidance of a recession. German CPI came in bang in line with expectations. The German ZEW sentiment survey in here, parts of it was slightly worse than expected, but the main piece of data in here, the sentiment data, was actually slightly better than expected. So that's an investor in sentiment index in here survey. So that's certainly a positive as well. Going into today, actually, we do get OPEC monthly reporting out today. Not sure how important that's going to be. Core CPI data out of Canada, again, probably not a big focus. We get Williams speaking later today, 1500, 3 p.m. And that is, remember, Eastern time, right? Yeah, Eastern time, right? Yeah. So yeah, we'll be watching out for that as well later today. I think that's Eastern time. Yeah, we are. I'm still logged in as Eastern time. Yeah, 5:35 at the moment in Eastern time. So 3 o'clock this afternoon Eastern time, Williams is speaking, and there's that Bank of Japan interest rate. So very much all eyes on that going on the overnight. We also have earnings, remember, ticking along in here at the moment. So the earnings for today are out. They were all ahead of the bell. Morgan Stanley beat. Goldman Sachs missed. Okay, those are the main two we were looking at today. As we go through the week, just to give a look further out in here, I'm just going to adjust my filters. I've got the UK and France and Germany. I'm going to just keep it to the UK in here. To the US, excuse me, and just keeping it on the 3 stars in here. So if we go in here and go to this week, You'll see in here, Charles Schwab, probably not a big deal in here. PNC Financial, probably not a big deal tomorrow. Really, it's Thursday. Procter and Gamble and Netflix. Procter and Gamble ahead of the bell, Netflix after the bell. Remember, the Netflix is a reflection, a barometer of the US consumer and also the global consumer. Okay, so it's often seen as a bellwether there. So certainly watching out for Netflix, but that's Thursday after the bell. So that's going to be really the main focus for me anyway on the earnings going into this week. 5 things you need to start your day. Okay, China bulls, China re-up. It said this is bullish forecast in here from Morgan Stanley, Goldman Sachs. China equities gaining 10% this year. Okay, and then looking for this to be to reinforce the fact that we don't see as big a slowdown. We don't go into recession in the major global economies around the planet in here going into 2023. So can we get a cooling of inflation? The higher interest rates bringing inflationary pressures under control whilst we avoid recessionary pressures, and maybe the China reopening is going to make that more positive, okay, make that more attainable. And if that's the case, then we may see a more of a positive outlook and backdrop for not just Chinese stocks in here and the Chinese economy, but also for the global economy, okay. Trade ties between the US and China is on track to break records, okay. Resilient links between the top economies. Davos attendees in here. Davos not really impacting us. There's been a big focus, obviously, it always is from the media, but not really impacting on markets and at the moment. And markets in here fairly quiet in the after the holiday and just focusing on the data, which we don't have too much of as we go through today. Focusing on Williams, Goldman Sachs, Morgan Stanley, which we've already had. Okay. What else do I have for you in here? Stocks slide. Well, I wouldn't say slide. They're down, okay, but they're certainly down. But just a dip after a very strong performance all of last week and strong performance as we saw on Friday after the CPI release. Futures slip. I think that's probably better than slide. Ahead of Goldman, MS. Well, this was ahead of Goldman and MS, and obviously Goldman missed, MS beat. Earnings as China data hit sentiment. So we did have this other Chinese data in here. So here's the Bank of Japan that I was talking about. Policy change fears sideline bond sales with spreads riding. So yeah, I mean, concerns that we could get another move from the Bank of Japan. Goldman Sachs, we've already mentioned those. Oil steady as investors zero on Chinese demand growth. Okay, so again, talking about that Chinese trade data, but then also in here, Goldman UBS joined bullish bets on global assets as China reopens. We've already spoken about that. And then this is a bit of a bigger picture concern here. China's first population drop in 6 decades sound alarm on demographic crisis. So real concerns for a shrinking population in here for the world's factory. Fund manager allocation to US stocks in January collapses. Bank of America survey funds. Well, that's kind of a positive. Okay, so allocation of US equity collapsed in January. 39% saying they had underweight position. Okay, the most since October 2005. But that, remember, is underweight US relative to the world. This is not then US equities. This is not equities versus bonds. Remember, before there was a lot of there was a huge amount from the Bank of America fund manager survey last year. A lot in the fourth quarter, saying us that they had funds had extremely high cash reserves. Okay, so they were in nothing. Okay, basically sitting in cash. Now it's telling us they're underweight US. Okay, but underweight US and then overweight global. Okay, so in here, look, the survey showed investors turned bullish on European equities, flipping their allocation to a 4% net overweight. Okay, fund managers also moved into emerging market stocks, increasing their net overweight to 26%. Overweight to 26%. So underweight in US is actually bullish. Okay, underweight in US is bullish. Okay, you might not saying that if you're in the US, but it's bullish because diversification. It means rather than going into strong, steady US stocks, the US was seen as probably the economy that was most likely to be able to maybe avoid recession. With Europe certainly under pressure and clearly emerging markets under massive negative pressures as we were through last year. Now we're seeing diversification into Europe, into emerging markets and out of the US, and that's a global positive in here because it means we're in more of a risk on mode. Okay, so it doesn't mean it's a negative for US stocks. What it means is that all stocks markets are more likely. The perception is that everything's going to rally, and these other markets are going to outperform potentially the US. So going overweight non-US. What else we have? China's reopening fuels global growth force optimism. That's coming out of Davos. In here, China's 2022 economic growth, one of the worst on record. So looking back, this was the data that's kind of unsettled markets a little bit. Economic growth for last year, but that was that post-pandemic policy faces test, right? Because they stayed locked down through 2022 with most of the rest of the planet reopened. Okay, and if we look at where we are this morning, we've had a slight dip on European bourses, so we're down between 0.2, 0.3%. FTSE, DAX, CAC, UK, Germany, France. And if we look at the US exchanges, we're down about between 0.25% and 0.4 in here between the S&P and the Nasdaq, and 0.2 down on the Dow, having had a decent rally back on Friday and nudging higher and actually sideways in here during the partial opening yesterday. Okay, let's have a quick look in here of the stock indices and also the other markets in here. So yes, we get this little dip and a rebound yesterday, but a charge higher really from the last week and a half or so in here. A dip and a strong rebound back on Friday through the US CPI data, and then yesterday just a sideways consolidation, but again a dip and a rebound in here again this morning. This is the Nasdaq, excuse me. And if I go and take a look at the 15-minute chart on the Nasdaq, for me, if you look at this bigger picture in here, so that was the erratic price action that we saw through the, what was this? This was through the, what do we have? It was Fed minutes, was it? Fed minutes? Yeah, back last week. Yeah, erratic price action. I can't think what we had there, right? This is CPI data in here. This was on Friday. Where do we have last, on the 12th? No, sorry, CPI, excuse me. CPI was on Thursday, right? CPI was Thursday. Excuse me, getting it wrong in here. CPI Thursday, we got the follow through on Friday, right? Yeah. Excuse me, guys. CPI Thursday. So that's the choppy price action on Thursday. Market kind of chopped around, but defended support on Friday. New highs going into the close on Monday. A little dip and a rebound. So sideways. I think this is high level kind of flagging consolidation in here. For me, I can only sit more bullish in here. And if you take a look at this tiny little kind of counter trend line that you've got across the top in here, you see we're already breaking above that right now as we speak in the last 15 minutes or so. So for me, this stays very, very bullish in here. This is the Nasdaq, can only be bullish on that. And similarly in here, so dip and a rebound back on Friday, dip and a rebound back on Thursday after CPI, a minor dip consolidation yesterday, narrow range, and then this morning in here, relatively resilient. And again in here, if we look at the little counter trend line that we have coming across the top, from the last, just literally since Friday's data, since the peak in here. Actually, this is coming off the peak from overnight on Monday, and you can see, look, we're bumping through that already. So for me, it stays bullish. It's going to have to take out this low in here. So that's like the Monday overnight low. That's minimal to look more negative. Down through 39.96 and 3/4, and really down through that little swing low there, 39.85 to be more negative. Just looking at those levels on the Nasdaq, really it's down through that low there, only through there initially 11.510 and a quarter, and then really down through there 11.454. Only through those levels it looks more negative. For me, this looks like we're looking to test top side again today. Let's take a look at bonds and equities as well in here. So first of all, bonds, we have had this trailing back, but we're still inside pretty much. Well, we actually poked a little bit higher back on Friday, but we're still caught within Friday's kind of CPI range, and actually above the kind of open from Friday in here. So if we zoom in now on the bonds, we're kind of given up. If I just redraw this, pull up this retracement. So this is the post CPI price action, the choppy price action, and the new high from CPI. We're kind of holding around this 61.8. So I think, around here on the bonds, you've got support kicking in between 129 even down to like 128.29. Whilst above there, it stays tentatively positive in here for bonds, and you've got this kind of little internal trend line that comes across here. But really it needs, I think, a break above there to be more positive. 129.21. level ahead of there, 129.13. So minor at 129.13, 129.17, really up through 129.21 through the trend line. It gets a little bit more positive on bonds. Let's take a look at gold and oil. First of all, oil, a little dip yesterday, back higher despite the kind of the mixed data from China, back higher in here today, really honing in on this swing peak. So staying positive. This peak in here from the beginning of the year, that is up at 81.50 and breaking, it's been flirting either side of 80, back above 80 now. I think up towards 81.50 is certainly a possibility going into today. And you can see breaking higher, the equivalent counter trend line is down through there that we just looked on stocks. So if you think we think we're positively correlated in here, we've seen this stock rally, similar stock rally in here since the beginning of the year, since about 5th, 6th of January. So if we think we're positively correlated, we're breaking higher now on oil. So maybe that's telling us that stocks should be breaking higher too. Certainly looking at potential for up to that peak there from the beginning of the year, 81.50, and maybe even as high as these peaks over here. So we're up at 82.75 and 83.27, maybe that kind of area going into the next 24 hours. Finally, we'll take a look at gold. So a minor dip. We made a new high yesterday in the partial open. Dipped lower but bouncing already. That trend is a very, very, very steady trend. 2 days down. Look, we haven't had more than 2 days down for a long time in here. Look, 2 days then up, 2 days and then up, 2 days and then up. So we've had, this is the second day down. So potentially in here looking for a rebound. If I go into the 15-minute chart, we're already getting that rebound again from the 16th peak in here. The same counter trend line. Remember, there's a positive correlation at the moment between gold and stocks. And if we look at that's our horizontal line. Don't want that one. Oh, sorry guys, let me get rid of this. If we draw the this counter trend line, it's the same counter trend line I've been drawing off the other charts in here. Look, and we're flirting with that as well in here. And just setting back from that, my inclination was be next break above the recent high to be going with that. So the recent high, 1916.7, certainly looking for it back towards 21.22 today, maybe even back up to like 28.30 going into today. Should we surrender the current overnight low, then this little downtrend is very much intact. You see we're falling in here at the moment, but I wouldn't venture as short until it broke back through there. 1906.8 for further downside. Okay, that's all I've got in here today. Don't forget, guys, in here the Trade and Mind session, which I've closed it down there. The Trade and Mind session that we have tomorrow. Tomorrow, I'll remind you again tomorrow after the webinar. That is going to be, if I go back in here, it's 6 o'clock GMT, 12 o'clock CT Central Time, and 1 p.m. Eastern Time. So please do join us for that tomorrow, the Trade and Mind session. Please do send any questions in you have around goal setting, or maybe the goals that you've set yourself, maybe for January, or maybe for the month, or maybe for the year, and we'll talk about those. So please do send anything in to James, to myself, to support at Trade Day, info at Trade Day. Ask us anything at Trade Day, wherever you want to send it, okay? But it'll get through to us. So send it through into one of the forums. Send it through to us. You know our email addresses, and we'll deal with that tomorrow. All right, guys, I'm going to wish you all a great trading day. Stay safe out there. Take care, and I'll be back with you with another bull versus bear webinar tomorrow.